Hello, everyone, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. I'm Henrik Andersson. I'm the co-founder and CIO at Apollo, and today I'm joined by Pratik Kala, our new head of research and portfolio manager. I'll introduce Pratik in a bit. For everyone new, Apollo Crypto is a multi-strategy investment fund manager that is based here in Melbourne, Australia, and we invest globally. We have more than 7 years of a successful track record with 3 active funds, and we focus solely on managing portfolios of crypto assets and strategies on behalf of wholesale investors, family offices, and funds of funds. Thank you very much to the audience for attending. We hold these webinars on a quarterly basis, and we also publish weekly newsletter along with long-form quarterly research. And please head to our website at www.apollocrypto.com to subscribe and to find previous research and blog posts. The purpose of this webinar is to inform our investors and followers and to provide general update on the crypto markets and our funds. And as a reminder, this is a general discussion and is not to be taken as financial advice. Please do your own research when considering an investment in the crypto markets. As always, we are happy to take questions from the audience, so please submit any questions as early as you can through the Q&A feature, and we will answer the questions at the end of the webinar. With that out of the way, I'm happy to welcome Pratik to this session. Pratik joined the firm in October of last year as head of research and portfolio manager, and Pratik has a background in traditional finance. And before joining Apollo, he built one of the strongest track records managing a liquid crypto fund. Pratik, anything you'd like to add?
Yeah, no, pleased to be here at Apollo and join the team. Been here for about 3 months. Little bit of background on me. I previously, as Henrik said, was in traditional finance, did some stuff at JP Morgan, NAB, and various other firms. I've been in crypto since 2016 on my personal account, investing, trading, actively monitoring the markets. So it's my 3rd cycle. And on top of running a liquid strategy at my previous firm, I also helped launch Australia's spot Bitcoin ETF, one of the first ones on the ASX. So very well experienced with how the larger pools of capital think about crypto and investing in crypto, and where new money would potentially go to or flow towards in this new emerging asset class.
Awesome. Great to have you on the team again, Pratik. So let's get started with our presentation. Hope you can see the slides now. So this is the Q4 webinar, and again, we hold this on a quarterly basis. And do remember to ask questions as well in the Q&A, and we'll come to that at the end. So the agenda for today, we'll introduce our funds. We talk a little bit about the perspective on the market. We'll talk about what's happening with the US election and what's happening with Bitcoin and traditional finance. And then we'll provide a little bit of an outlook both on the macro and on more crypto specific outlook. We'll also talk about our portfolio and how we are positioned for this market. And we'll end with a Q&A. So this is looking at the market on a 1-year horizon. And we can clearly see we have positive numbers for Bitcoin, Ethereum, but also equity markets, S&P 500 and NASDAQ. Bitcoin has been a big outperformer in the last year or so. We'll come to why that is, but I think it's safe to say that one of the reasons is the launch of the Bitcoin ETFs and the inflows we have seen to Bitcoin from those vehicles and the adoption of Bitcoin among traditional finance and companies at large. We can see clearly in this chart here that we had an upswing in November, and that's when the US election happened. So definitely a positive catalyst for the crypto markets. Anything you'd like to add there, Pratik?
No, that's it. It's yeah, the next slides will cover why we've seen some of the changes in the crypto market and the performance.
Yeah. So as I mentioned previously, at Apollo, we manage and advise 3 crypto funds. So longest running crypto fund is the Apollo Crypto Fund. It's been around for 7 years. So we built a 7-year track record. It's not that many funds globally that I can say they have a 7-year track record. But this is one of them. It's an Australian unit trust. So regulated here in Australia, monthly liquidity, and it's really designed to be your one vehicle exposure to the crypto markets. So it contains all our best ideas and everything from Bitcoin, Ethereum to high quality primary deals as well. As you can see, we have been outperforming our benchmarks since inception. So obviously, if you're interested in the fund or any of the funds we talk about, you can get in touch with us through our website or directly with us as well. We also advise 2 offshore funds, and one of them is the Apollo Crypto Frontier Fund. So the Frontier Fund has an exposure to alternative crypto assets, and with alternative crypto assets we mean assets that are not Bitcoin and Ethereum. So these are typically smaller assets that are generally more volatile, but could also offer a higher return potential. We also have a higher allocation to high quality primary deals in this portfolio. On the right side, you see some of the examples of the assets in the portfolio. So we hold assets like Solana, which is currently the largest asset in the portfolio. So we hold Solana, we stake Solana to earn a yield, but we also have many other interesting assets in the portfolio, like Athena, Hyperliquid, and Aave, and some of you on this webinar, I'm sure, will have heard of those assets. Derive is another one here, which is doing something interesting in the DeFi space. We also have a couple of examples here of primary deals that we have done, Solve and Swell. And this is a US dollar fund. So the first fund I talked about, the Apollo Crypto Fund, is an Australian fund, but this is a US dollar denominated fund. So that's the Frontier Fund. And the third fund that we have is the market neutral fund. So this is a very different fund. The first 2 funds, there are long crypto assets. This is a market neutral fund trying to achieve an absolute return. And it's what is called fully on-chain. So this fund uses, you can say, arbitrage strategies to generate typically a return of between 1% or 2% per month, very consistently. The target return for this fund is 15 to 20%. And last year, we were in the middle of that span. So net of fees, we achieved 17.2% return, and we had 100% positive months in 2024 for this fund. So we believe the market neutral fund is highly attractive when you look at the risk reward. And now we'll go into more recent events, and probably the biggest one of them were the US presidential election. And Pratik, I'll let you talk about this slide.
Yeah, thanks, Henrik. So the biggest catalyst that happened to crypto as a sector, as an investable asset class, was a US presidential election. And very frankly, Trump win was an enormous boost to crypto. I think we would be in a lot of pain if the Kamala Biden camp would have won because of their stance towards crypto. So Trump win was phenomenally great for crypto. The prices have reflected that, with the price of Bitcoin rallying significantly since election win on November the 5th. Trump's made a couple of election promises, and he has mentioned that he wants to make America the crypto capital of the world. And he has actually moved swiftly to create several executive orders to support that. So he's not only talked the talk, but he's also walked it. Some of these executive orders have the highest level of government officials running potentially a future crypto strategy, including the Treasury, the Commerce Secretary, the SEC Chairman, and the crypto czar, David Sachs. White House, the White House running a crypto-specific ball and a press conference was literally unbelievable 18 months ago. So we've really come a long way in the last 18 months as an industry. Now, is this one and done, or will crypto still have staying power under a Trump admin? I think it's going to be positive still going forward. The reason why is the crypto industry continues to be a large donor to Trump and his campaign, and continues to have a lot of cash to support, upcoming elections, midterms, and so on. So the lobbying power for crypto has increased over the past several years. Some numbers. There are 268 pro-crypto House members and 121 anti-crypto House members in the US, and 19 pro-crypto Senate members and 12 anti-crypto. So effectively, being anti-crypto is not even politically favorable anymore. So you'd be shooting yourself in the foot. It was potentially popular 3 years ago with the collapse of FTX and Sam Bankman-Fried, but we've come a long way, and it's politically unpopular to be anti-crypto now. Moreover, everybody around Trump has some exposure to crypto. So Vice President J.D. Vance, Elon Musk, Robert F. Kennedy, Vivek Ramaswamy, Scott Bessent, the new Treasury Secretary, Howard Lutnick, the new Commerce Secretary, actually is a big owner of crypto, and both his sons, Eric and Barron Trump, all own some sort of crypto. So effectively, when so many people surrounding you believe in something and own something, you naturally gravitate towards it. So it's also a very positive sign for crypto post Trump win. Probably the largest catalyst as well is Howard Lutnick, who is the new Commerce Secretary. Publicly mentioned, he's also the owner and CEO of Cantor Fitzgerald, by the way, which is one of the largest asset management firms in the world. He also said himself that he owns millions of dollars of Bitcoin, and he knows that it's going to be billions of dollars. And his firm is looking at various ways to make Bitcoin more capital efficient and wants to build an ecosystem out of it. So it's all shaping up very positively after a Trump win. And on to the next slide. We also believe that Bitcoin has now crossed the chasm and there's no turning back. Bitcoin will be here way after we're gone, I think. So a couple of years ago, you could make the argument that Bitcoin could go to zero, potentially die, not sure, volatile, speculative. But I think now we've crossed the chasm and there's absolutely no turning back. It will be here for many, many years, 100, 200, 500, who knows, for a long time. The reasons why are Bitcoin's now talked about not only in the US, but the European Union and the Japanese parliament. It's being talked about as a global movement all around the world, and it's not an isolated fringe asset anymore. Now, 15 US states have bills in progress to enact a state-level Bitcoin reserve. So obviously we have talked about a strategic Bitcoin reserve at a federal level, but even individual states have a lot of power to enact their own Bitcoin reserves, and about 15 of them are already progressing talks about creating that. 157 corporates now hold Bitcoin in their treasury, and the number is rising rapidly. So it started off with MicroStrategy leading it, and now we've got firms all over the world in Germany and France and European Union, including Japan, starting to hold Bitcoin in their treasury. So I think the corporate Bitcoin treasury narrative is just starting. MicroStrategy, which as of a few hours ago rebranded to Strategy B, is also pulling in many other facets of TradFi into crypto, including insurance and preferred equity funds. So more and more capital from other different parts of the traditional system is pouring into crypto, which is great to see. Bitcoin ETFs were the most successful product launched in years. In fact, I think it is the most successful ETF launched in history. Some numbers on that is, I think 1,800 Bitcoin ETFs were launched over the last 4 years, and the top 5 were Bitcoin ETFs. So the demand is clearly there. It's not just something that is that launched a product to test the market out. It was launched and the demand was very, very significant, being the most successful products. Our deep Bitcoin options market also allows more capital and participants into the ecosystem. So a lot of people, funds, pension funds cannot, enter into an asset class if there's not an options market because they're required for hedging. And now a deep Bitcoin options market exists as well, to the tune of several $1 billion traded on every expiry. And Bitcoin is now to be used as collateral for commercial and real estate loans. So there are a couple of funds in New York that offer commercial real estate financing and residential real estate financing as well. And they would like to structure a loan where 5 or 10% of the loan is denominated in Bitcoin. We can share videos if you want of that later, but it's fascinating. But in their own words, they think that they can actually reduce the interest rate on your loan if you were to commit to deposit 10% of the loan amount in Bitcoin with them over a period of 4 years, because they think risk adjusted Bitcoin's going to rally. And so they'll have better returns and lower risk in offering a loan to you anyway. So really, really, really great things happening around Bitcoin. And finally, banks will soon be able to custody and provide crypto-related services because of the repeal of SAB 121. For people that weren't paying a lot of attention, it's effectively SAB 121 forced banks to have a one-to-one backing for any crypto they hold on the balance sheet. So if you held $100 million worth of Bitcoin on your balance sheet, you need $100 million of treasury bills to offset it. Naturally, no banks wanted to do that. And so it never, caught on in the commercial banking ecosystem. That's been repealed under Trump, the thing he did in the first week. So now banks will be able to now custody and offer services around Bitcoin. And I think it will soon, end up in some sort of insurance products and home loan products and car loan products and all of that. So it's very positive. And this is not only Bitcoin, but it's also broader crypto. So the repeal allows many of those to come in. And a strategic Bitcoin reserve is still on the table. A lot of people anticipate it will happen in the first week. They are going to talk about it. Just yesterday's White House press talked about discussing it in the future. There's no ETA on that, but still optimistic that that may come about. So in summary, there are really, really huge catalysts that have taken Bitcoin to the next level and literally crossed the chasm and no turning back, in my opinion.
When do you think we'll see the actual strategic Bitcoin reserve, or when do you think we'll hear about it next time? And do you think other countries might follow as well?
Yep. So the fact that it is being discussed in the US at this level has already forced other countries to talk about it. So on the Trump campaign, Trump talked about the strategic Bitcoin reserve. Other countries picked up on it, but didn't pay attention. Now that Trump has actually won and is already, and him and his secretary are already talking about it again. I have heard rumors and politicians basically in the French and European parliaments talking about having their own versions. And actually even some Australian states and some smaller Australian political parties are talking about it. I think the Libertarian Party in Australia also wants some of that. So it's becoming to a global movement. I think a lot of countries are now seriously talking about it because of what's happened in the US. In terms of when we will see a strategic Bitcoin reserve, I think the probability of Bitcoin being in the US sovereign wealth fund is much higher than a reserve in the short term, just because it fits perfectly into a portfolio. If you add Bitcoin into a portfolio and you backtest it over 5 years, it gives you better risk-adjusted return. So the case is very clear. I think it'll make it there, and then eventually we will get some sort of a strategic Bitcoin reserve as well, because the US just owns so much of it through previous confiscations. So it's a natural like conversion for them. It's not going to be a big deal at all to actually enact it. And then there will be a global race as other countries such as China, Russia, Japan, India, other countries sort of start looking at it and saying, well, if the US is going to do it, maybe we should allocate 0.5%, something small, but it gets the conversation going and gets everybody off zero, which is the most important thing.
Yeah, agreed. That's super exciting.
Yeah, and they're also, so the previous slide was about Bitcoin, right? But a lot of people actually tell me, okay, like, yeah, we get Bitcoin, but what about the rest of crypto, right? So the rest of crypto, again, under Trump, is going into a new era as well. Now, again, if Kamala would have won, I wouldn't even have talked about this slide because there wouldn't have been much to put here. But Trump won, and now this space is very exciting. So there are big signs of traditional finance integrating with crypto. Some examples of this are, BlackRock, Apollo Global, not us Apollo, but the big private equity firm, KKR. They've all launched tokenized versions of their fund. Now, you may think, what's up with these tokenized versions? Like, there's already funds available. But if you've ever worked for like a large asset management company or a bank, you sort of realize the onboarding process, the bank transfer, the deposit into the fund, the unit issuance, the unit registry, and the sort of accounting and fund updates employs armies of people. And it's it's filled with friction. A tokenized version effectively just gives you something on your internet phone that in the future, hopefully you can just transfer like you send an iMessage or a WhatsApp message. So I think a lot of the traditional finance firms are seeing a lot of value in that and coming online. We've got several $1 billion on chain at the moment. And I think that's going to be a trend that is going to progress in the future. Another value of bringing funds on chain in a tokenized way is capital efficiency. Today, if I have, for example, KKR or Apollo Global has a huge healthcare fund. If I've got, $1 million worth of those stocks, I can't really pledge it and draw a loan and buy a car or go on a vacation with that, or at least it's very cumbersome. But having a tokenized version would be able to do it atomically, basically in real time. So there's a lot of benefit of that, and all of that is going to come on chains outside of Bitcoin because Bitcoin can't support these type of sort of smart contract programming. $200 billion of US dollars are circulating in stablecoins. That's a big number. I mean, it's given that crypto industry is still nascent. This isn't 2x the entire New Zealand, stock market capitalization. And New Zealand's a small economy. I get it, but $200 billion is still pretty big in a short period for crypto. That number is going to increase significantly in the next few years as well. And again, stablecoins can only be done on chains outside of Bitcoin today. So some of the chains that we have in our portfolio are poised to benefit as that sector grows. The Stripe is a big payments company in the US. They are heading very aggressively into crypto as well. Stripe is the dominant payments company for e-commerce online. They acquired a company called Bridge, which does crypto payments for 1.1 billion US dollars. So, a unicorn plus acquisition. This is by no means a small amount, and they acquired it pretty quickly as well. Bridge had only been alive for roughly 2 years. So a lot of people were surprised by that, but I think all of us are a bit annoyed with the 2%, 0.5 to 0.85 to 2% clicks that Visa and MasterCard take on every purchase. I think regulators are already fighting that. Why is that? Maybe at some point 20 years ago it made sense, but not anymore due to tech scalability. And blockchains are perfectly positioned to transfer, to do payments very cheaply, very quickly. So Stripe is entering there. So we're seeing traditional tech companies enter into the space. I've talked a little bit about real estate loans backed by Bitcoin. They're coming into the market. You can ping me, ping us, and we can share the exact video of the New York companies that are offering these products. I talked about the incoming Commerce Secretary, Howard Lutnick, who owns the Cantor Fitzgerald. He wants to make Bitcoin more capital efficient, i.e. use it in sort of home loans, car loans, insurance products, and all of that. So just got to be an ecosystem being built around it. And the crypto czar, David Sachs, has talked about stablecoins being a strategic priority for the US. He talked about it yesterday. It makes a lot of sense if the US wants to dominate, keep the US dollar as a dominant global reserve currency and trade currency. So they want to, move forward with more aggressive stablecoin regulations in favor of crypto. And again, stablecoins can only operate on some of the chains that we have in our portfolio. So that's looking positive there. The SAB 121 repeal allows banks to custody and provide services related to crypto. So this is not only Bitcoin again, Ethereum, Solana, these are also multi-billion-dollar assets. And I wouldn't be surprised if sometime later this year, there'll be banks allowing you to draw home loans backed by Ethereum or Solana. The LTV will be obviously conservative, I imagine, to start with, but it's a start. And I think that should be growing over the next few years. And a whopping 33 new crypto-based ETFs were filed with the SEC after Trump win. So I think the entire industry is just waiting for a decision on that. These ETFs have various different strategies, from Bitcoin, Ethereum to Bitcoin, Ethereum, Solana mix to 2x leveraged to 2x long to 2x short. So a whole bunch of these products are actually coming onto the market, including for XRP and Solana. So new sort of tokens and their ETFs are coming onto the market as well. And to simplify all of this, we have new index funds launching as well. That just gives you broader exposure to crypto. That's okay for people that want it. I mean, personally, I think a fund like ours provides much more value in this current emerging place than a broad index, because this still requires a lot of nuance in investing in this space still, as it's still pretty early stage relative to more mature industries. So yeah, that's the summary of how traditional finance is heavily integrating with crypto and expecting that trend to continue onwards. And this is everything outside of Bitcoin. So pretty bullish on that over the medium term.
Thanks, Pratik. So obviously we have Bitcoin and Ethereum ETFs. Personally, I think Solana might be one of the next ETFs we will see, and potentially already this year with all the changes happening at the SEC. What do you think, Pratik? Do you think we'll see a Solana ETF this year?
Yeah, I think that's going to happen. We have the 3 ETFs or 4 ETFs that are slated on our Solana, XRP, Hedera, and Litecoin. I think that will happen. I'm not sure if from a regulation side, they will require the futures market to be trading for a couple of months before a spot market opens up for an ETF. There are mixed opinions on that. But I think with the crypto czar and all of that, they don't want to be left behind on this as other countries are moving. So I'm pretty optimistic that we will see some of these ETFs get approved. I think BlackRock hasn't filed for one yet, but you sort of know if BlackRock files for one of these other ones that it's sort of a done deal, because they've never had I think in their history, they've launched, thousands of ETFs and only one ever got rejected. So yeah, that would be the sign that it's game on.
Yeah, that's really interesting. And BlackRock, as you mentioned, they're into tokenizing assets. And if you listen to the CEO of BlackRock, he's talking about all assets, equities, bonds, at some point will be tokenized. So that's hugely bullish, I think, for the industry as well.
Yeah, absolutely. It makes perfect sense. That should be the future, where all your assets are in one portfolio and you can redraw them and use them efficiently, versus having to take a ton of paperwork to the bank to draw a $200K loan. Like, it's too cumbersome. If it was tokenized, you could just swap it and do it in real time, as simple as a WhatsApp message. And I think that's coming in the next 5 to 10 years.
All right, let's move on to market outlook, and we'll start with some thoughts on the macro. Just an update from last quarter. So this is the expectation for the Fed in the US, the outlook for interest rates. And if you look at the probabilities where they stand today, there's basically a 70% probability, a 60 to 70% probability that we'll have a 50% in total basis point cut before the end of this year. So we might be looking at 2 cuts from the Fed. Obviously, there's a lot of uncertainty in this. Trump is proposing tariffs that might be inflationary, that might affect the future outlook for rate cuts and so on. But this is kind of the current market expectation. So looks like we might still see some easing from the Fed, and I think from other central banks as well, ECB. We have seen a couple of rate cuts already in other central banks. I think we most likely will see one in Australia as well this month. And what we can say about that is when we see rate cuts, that's usually good for risk assets. And that's how we would categorize the crypto assets for now. They are sort of trading as risk assets. They're not completely uncorrelated with other markets, right? So usually monetary easing is good for risk assets like crypto and also equity markets as well. Also an update on the Bitcoin ETFs flows, since they have been very important for the Bitcoin price, and we have continued to see strong inflows into the Bitcoin ETFs. The Ethereum ETFs have not been as strong, but that could pick up as well once kind of the Ethereum price picks up. We actually more recently have had some good Ethereum flows as well. But Bitcoin has by far outperformed Ethereum. And as we mentioned earlier, the Bitcoin ETFs have been the most successful ETF launch ever. So that's very exciting. And as we said, most likely we'll see ETFs on other instruments outside Bitcoin and Ethereum as well. Could be baskets of assets, could be things like Solana as well. Another potential catalyst for crypto markets is coming up. So for those of you who remember, one of the largest crypto exchanges, FTX, went bankrupt in November of 2022. So they will finally start paying back creditors. So the state is saying that they will start payments on February 18th. So that's just that's very soon, in a couple of weeks. So that's very exciting. The payments will start with the smaller creditors, so those under 50,000 creditors with claims under 50,000 will start being paid on February 18th. That's what we are hearing. And those creditors make up around $1.2 billion in total. The recovery is around $15 billion. So a smaller proportion will start being paid out now in February. And then other creditors will start getting paid back most likely in March. So just one month delay. And I think the outcome is pretty good. The creditors for the first batch will sort of earn a 9% yield or annual return on the credit. So that might actually be quite happy with that, and some of that money will most likely go back into the crypto markets. Obviously, these are crypto traders that are getting basically cash in the bank, or they might even get paid out as stable coins, and some of that will most likely flow back into the market. And then finally, before we go to Q&A, a bit of a portfolio update, and I'll hand it to you, Pratik.
Yeah, thanks, Henrik. So we've made a couple of changes to the portfolio in the Trump era. We've refined the strategy, and we've concentrated the portfolio in high conviction projects. So we have the view that Bitcoin, Ethereum, Solana, the three chains, will clearly dominate 90% of all the activity. So Ethereum and a range of layer twos on top of Ethereum, such as Base and Optimism. Solana is a very popular chain, and they're building layer twos on top of that as well. Bitcoin being Bitcoin, I think these three chains are going to dominate 90% of all the activities. So it makes a lot of sense to concentrate positions in the winners within these chains, rather than have a bunch of assets in chains that may or may not survive. So we've cut down a lot of names in the portfolio and concentrated it into the winners. And it's much more easier to manage it, much more easier to capture the catalysts and day-to-day sort of look at any risks that may come on the horizon. We are also focusing more on liquid strategies now rather than primary deals. I think under Trump era, it's right that liquid strategies, we could easily get in and out of positions depending on upcoming catalysts. Primary deals typically take a bit longer to mature, 2 to 4 to 6 years. So the opportunity at the moment is in liquid, and that's where we're focusing. We have also started generating some yield in a very conservative fashion on Bitcoin through some DeFi protocols and options. So as you know, Bitcoin is a non-productive asset like gold. Typically just buy it and you store it as a store of value. But there are opportunities in the market to generate yield on Bitcoin. So our goal is to outperform Bitcoin by holding Bitcoin, i.e., whatever Bitcoin we have, we want to outperform that instead of just having it sit idle in custody. We're doing it in an extremely conservative fashion at the moment, and at a very small amount as we get more comfortable with some of these. Now, some of the top picks in our portfolios, and you could look at the charts, I'm glad to say that they've all done reasonably well, despite the volatility in recent weeks, include Hyperliquid. We think it is a clear perpetual DEX category winner. It has a stellar product, and it's doing really well, and they have a path to actually gain market share in various different fields as well going forward by building their own borrowing lending product and standing up their own L1 chain. So that's very exciting. It was actually the only token, if you look at it, that stayed positive despite the volatility last week. So volatility post-tariff. So very interesting project. We're happy to have that in the portfolio. Radium is a DEX on Solana, so focusing on the Solana chain. It has an aggressive buyback and burn, and we think it's a clear winner within Solana DeFi. So I think just Radium did more volumes than the likes of Uniswap, and they buy back and burn their own tokens significantly. So that's really good in the Trump era. And I think as the market matures, we want to see more of this revenue distribution mechanisms in various chains. Jupiter as well. It's on Solana, but it wants to be more omnibus and expand. It's also got an aggressive buyback and burn. It's got an ambitious roadmap. It's a great product. We use it within our funds, and think it's got a bright future. Aave, a lot of people over here might know it. It is the largest borrowing and lending protocol, and they have TradFi integrations on the horizon. Aave tried to launch a traditional finance borrowing lending product on chain a couple of years ago. It didn't fly, and then FTX and other things happened. But they are going to relaunch it soon, and we're excited to see how some traditional finance organizations integrate with Aave on chain. My guesses are it's going to be the likes of BlackRock or Cantor that are going to be doing stuff with Aave on chain. And then Athena. Athena has now been battle tested. It is a unique product, and it has deep DeFi integrations. Initially, Athena was quite risky, but it's withstood the stand of time. It's withstood multiple huge volatile drawdowns, and it's been very stable. And it's been very, very nice, and a project that's been battle tested, and it's integrated deeply into DeFi. So we're very comfortable with that position as well. And it's also one of the winners in the portfolio. We have probably 7 or 8 more names outside of this, but these are some of the winners that we like, and we're obviously looking for new opportunities at all times within these 3 chains, or new chains if they come about. And some of our primary deals, such as Swell Network, Solve, and Derive tokens, they've launched their tokens, and they're now in our liquid book, and we are watching and managing them, and we're very excited to see them grow as well. We're in contact with all the founders and teams, and know their progress and the roadmap on those. So that's an update.
Awesome. I think that concludes kind of the formal presentation. So let's move to the Q&A part of this webinar. All right. We have a question from Brett. Hi guys, keen to know your thoughts on when DXY will weaken and allow assets to run. Do you see a standoff between Trump and Powell, and will something big have to break first? So DXY, that's the US dollar index. So it's been fairly strong recently, which is usually bad for asset prices in general that are priced in US dollar. And you could put crypto in that category. Do you have any view on DXY, Pratik, and what might happen going forward?
Yeah, so it's very hard to know, obviously, with Trump wildly changing his policies and adding tariffs and then removing them within 24 hours. So I think anybody in the world is just going to be guessing at this point with what's going to happen with DXY. All I know is the stated mandate of Scott Bessent, the incoming Treasury Secretary, is that he wants the US dollar and the DXY to go down, effectively devalue, to make American exports more competitive. As they go in the MAGA movement, they want to onshore manufacturing and they want to start exporting stuff, outside of just big tech and software services. And so they need the US dollar, or they at least desire the US dollar to go down. How they're going to achieve that is up to, obviously, the Treasury Secretary, but I know that's his stated objective and goal. And he's mentioned that on multiple different occasions. So hard to say. Obviously, Trump's throwing tariffs and removing them and retaliating. So that impacts markets, but cannot time that. But hopefully the Treasury Secretary, Scott Bessent, ran a hedge fund for many, many years, very well respected in New York circles. So hopefully he'll steer the ship properly and get the DXY to come down a bit.
Cool. We got a question from Sean as well. He's talking about trade finance, and thank you for contacting us, Sean, about trade finance. You can contact us through our website as well. We got a question from Cameron about Tether. Tether stablecoin being integrated with Bitcoin and Lightning Network, and also with Taproot assets and Schnorr signatures and OP-Cat providing smart contract and privacy could be compelling for Bitcoin. So my thoughts on Taproot and OP-Cat. So these are technical upgrades, soft forks that could happen to OP-Cat is a soft fork that could happen to Bitcoin, which could enable more expressive smart contracts basically on top of Bitcoin. So that might happen in a year or so. It's hard to predict. In the short term, what we are seeing is Bitcoin being tokenized on Ethereum. So historically, wrapped Bitcoin has been the big one, but we also have many alternatives today. Coinbase have their own, for example, CBBTC, and there are also LBTC, Lombard Bitcoin. And this is a way for Bitcoiners and people holding Bitcoin to use Bitcoin in DeFi to generate the yield. And that's something we are partly active in as well. So longer term, we might see something like OP-Cat being enabled, and that can kind of enable permissionless Bitcoin layer 2s, but it's hard to predict. Tether on Lightning Network was just, I think, announced in the last week or so. So we'll have to see how that develops. I think the big picture is that Lightning Network has been a disappointment. It's difficult to use the Lightning Network, not as easy as, for example, Ethereum L2s. So that seemed to have hindered the growth of Lightning Network. Anything you'd like to add to that, Pratik?
Yeah, this is this is not a surprising development. I think it was a long time coming that stablecoins will be launched on Bitcoin. My only comment over there is I would like to see how that works and how easy it is to use it. We use stablecoins and operate on chain in our fund on a daily basis, and we do cross-chain bridges and stuff. And stablecoins work very natively with smart contract chains like Ethereum L2s and Solana. I don't know if Bitcoin's tech stack today can build more complex logic on stablecoins. It may be able to use it for basic payments, that's fine, but I think the world we're heading into requires more smart contract logic to be built on. So I think it's a good endeavor by Tether, but we are still going to see other chains dominate stablecoin flows.
Yeah. All right, we got another question from an anonymous person. Could you talk to the potential that quantum computing could have to Bitcoin in crypto assets in general? Do you have a strong view there, Pratik? Quantum computing has been talked about for 20, 30 years. We might getting a little bit closer, but there's a long way, very, very, very long way to go still. And there are quantum resistant algorithms out there. And some of the algorithms that are used in, for example, Bitcoin, like SHA-256, are fairly quantum resistant. But those could be upgraded over time as well. I don't know, Pratik, if you have a take on this one.
Yeah, I mean, my take on that is I think Bitcoin is today the most computationally dense network. So some people may like to attack it if they build a quantum computer. But if you look at it, Bitcoin is still the 7th most valuable asset in the world. I mean, if you really crack the code and you can, use your resources to attack, why would you attack? I mean, just go after state actors or go after NVIDIA, Microsoft, Apple, and short the NASDAQ and, go there. I mean, I think there are bigger problems if they crack that to military and other security things. So I think when it comes, it'll be tested. People are going to talk about it, and the Bitcoin community of miners can come together and upgrade the network to be quantum resistant. So I'm not worried about that at all.
Yeah, good. Actually, a lot of questions. So that's really good. Hopefully, we can get through them all. Can you please talk to your performance over the last 3, 6, and 12 months? The short summary there is that if you look at our flagship fund, the Apollo Crypto Fund, over the last 3 months, we've been outperforming our benchmarks. It's been tougher over the last 6 and 12 months because of the Bitcoin outperformance over other assets over that time period, and the weight of Bitcoin in the benchmarks. For the market neutral fund, as I mentioned, we have had really stellar performance with 100% positive returns. Frontier fund focusing on altcoins. We haven't seen those altcoins really perform very well, to be honest, over the last period. We hope that will change. We usually have this wealth effect that when Bitcoin reaches a certain level, some of that wealth will flow to altcoins, and we'll have very strong performance for smaller crypto assets. So we believe that might happen in the future as well. Yeah, anything Pratik you'd like to add to that?
No, nothing on that.
Yeah, let's run through some of these questions a bit quick since we are already at the 45-minute mark. What do you think about the potential reduction when it comes to regulation under Trump? Will it basically lead to more crashes and more scams? That's essentially the question from Jeremy.
Yeah, I can quickly answer that. It's a net positive to the industry. Yes, there's going to be more grifting. Yes, there's going to be more of those things, but the industry is going to be more mature. We are going to see net inflows into the industry, and the quality projects are going to do fine, which is where we're focused. Trump himself launched a coin. We're all aware of that. He did it for fun. His team did it. That's fine. People have a different view on that. On maybe Trump is, grifting or taking money out of the industry. If that was his only intention, he wouldn't be signing these executive orders, putting in a working group and putting in very senior members of the committee, and, having his sons and other people publicly talk about it on X and other social media. I think it's a net positive. But yeah, sure. In any nascent industry, the amount of scams and stuff increase as adoption increases. We've seen that in credit cards and debit cards and e-commerce when it first started. People scamming other people's credit cards and all of that. So that's expected. That's fine. I think it's part of an industry maturation process. But net positive after Trump's relaxing of policies.
Cool. So since we're up on time, I think I'll just pick 2 or 3 more questions that we can try to answer. So we have one question from Zen Kwon. Hi, Zen. What's your cash stables percentage holding range in your 3 funds? So I can take that one. In the Apollo Crypto Fund, we have a cash holding currently around 7-8%. And that varies depending on our macro outlook for crypto. Historical context, that could range from 5% to 35-40%. So a relatively small portion of cash market neutral holding in that fund. For the Frontier Fund, which is a more aggressive fund, we're keeping the cash level at a very small level at all times. And then the market neutral fund, well, you could say that's basically benchmarked against the US dollar. So we're using stable coins to achieve a return in that fund. What else? Is the Apollo Crypto Fund minimum investment still 50,000 for new investors? Yes, that's correct. For the Australian fund, for the offshore funds, the minimum investment is $100,000. We got a question from Steve. Do you stake your Jupiter and Radium? The answer there is that we are staking as many assets in the portfolio as we can. Obviously, there is a trade-off between liquidity and staking in some cases, so that's something we're conscious about as well. Do you see any other question that?
Yeah, I mean, I can answer quickly 2 or 3. There's a lot, guys. So, I mean, feel free to directly call us or email us. We're happy to take one-on-one. I'll answer one from Adrian. You mentioned ETH has really lagged Bitcoin during this run. Sol has had its time in the sun with meme coin frenzy. What factors do you think will bring ETH back? I think ETH has gone through a sentiment shock, and there has been a couple of changes, a couple of problems with the Ethereum Foundation. I think they're bolstering back in the communities, coalescing around ETH and fighting back. It is still the OG decentralized finance coin. It's not going anywhere. It is still today the most decentralized network. They just need to sort out some of the leadership issues and direction. And once that's sorted, which I'm optimistic that will happen in a month or two, then we should see ETH showing some bounce back and coming back. I don't think it's going anywhere anytime soon. And what platform do you use for BTC yield generation? From Steve, there's a couple of platforms. One of our portfolio companies, Derive, they do some options. We explored other sort of options venues, and there are pools within Aave and Morpho and stuff that allow you to generate some yield on Bitcoin as well, on CBBTC and WBTC and likes of those. So yeah, those are 2. And sorry guys, I do see there's a lot more questions, but feel free to email us and we'll answer them one by one.
Yeah, fantastic. Yeah, we have an open door policy, so please contact us directly as well, and we'll try to answer your questions. Yeah, by that, I think we will thank everyone for participating and getting so many questions as well. That's really great. And we'll hope to communicate with all of you very soon again. Thank you.
Thanks for attending.